So now that we spoke about macro topics, let's change our perspective and go more into detail. Let's change to the micro perspective. In the last 6 months, and especially in the last weeks, there have been developments which were not expected to such an extent. Or maybe they were. I'm happy to give the floor to Michael Sonnenshein, newly appointed CEO from Grayscale, who will give us the insights on whether the development was surprising or whether this has been foreseeable for some time. So Michael, welcome to the virtual day in St. Moritz, and the floor is yours.
Thank you so much, Nicolo, and thank you to you and your team. Sad that we are not all in St. Moritz this year, but hope that everyone is safe and look forward to seeing you all next year. It is a pleasure to be here this morning with each of you. I'm Michael Sonnenshein. I'm the CEO of Grayscale Investments. We are the world's largest digital currency asset manager, today managing about $28 billion of investor money spread across a family of 9 different investment products. I think in the brief time I have with this audience this morning, I wanted to just highlight, some of the different themes that my team is experiencing, what we're hearing from our investor base, and make sure that I took this opportunity to ensure that this audience knew how much digital currencies have really changed throughout 2020, and really also how different they are from the 2017 rally we saw in digital assets. So if we look back at 2020, there were really quite a few extraordinary events that happened. Number one, if you look back to March, you saw digital currencies sell off dramatically, even more so than traditional asset classes in the wake of the COVID-19 pandemic. And what was interesting about that moment in time was obviously the world's global economy came to a grinding halt, but not just that. We saw digital currencies, I think, fall about 50% in a single day. And, from my seat and where we are at Grayscale, we did not get phone calls from investors asking us why prices were falling so much. If anything, investors were taking that kind of an opportunity to add to their positions, which, we found to be really encouraging, rather than kind of being discouraged by that volatility. And over the course of the year, obviously Bitcoin and the digital currency asset class as a whole demonstrated a lot of resilience and a lot of staying power. And so a couple themes really came out of that. Over the course of the year, there was obviously quite a bit of, macroeconomic uncertainty. And what we saw from policymakers, both here in the US and abroad, was that the antidote, or really the answer to this economic slowdown as a result of COVID, was to start doing printing, to start diluting fiat currencies. And for many investors, they really started to think about the fact that fiat currencies that they were invested in or had exposure to were being basically perpetually diluted, and really thinking about that in the context of the verifiable scarcity of an asset like Bitcoin. And so what we started to see is some investors, regardless of their view on Bitcoin specifically, really began to realize that their portfolios warranted inclusion of an asset that had verifiable scarcity like Bitcoin. I think a second thing we really started to look at was who else was coming out in support of this asset class. We had folks like Paul Tudor Jones and Druckenmiller and all these famous investors that have weathered all kinds of cycles in the market coming out in support of digital assets, amending their investment mandates to invest in digital assets. And so that provided a certain amount of air cover. And then we also really continued to see a strengthening of the regulatory environment around this. Not only here in the US, but abroad, we started to see a lot more developments around central bank digital currencies. Here in the US, the Office of the Controller of the Currency really opened the door and paved the way for banks to be able to custody and get involved in stable coins. We even saw some really notable financial institutions, whether it was Guggenheim or MassMutual, beginning to invest in Bitcoin. We also saw the emergence of a lot of corporate investors beginning to add Bitcoin to their balance sheet. And what also happened as a result of all of this was a massive increase in the price of Bitcoin itself, taking out that all-time high of 20,000 late in the year. And I think for a lot of investors, 2020 was that year that really solidified the asset class's staying power. Now, a couple of things that were important from our seat specifically at Grayscale. One was the fact that we now have two products that became SEC reporting companies, both our Bitcoin product and our Ethereum product, which are the largest Bitcoin and Ethereum products in the world. And I think what's important to highlight here is, number one, investors should be encouraged by the fact that there are products available for them to go and gain exposure to these assets and do so in a way that feels familiar, that gives them a CUSIP, that has audited financial statements, et cetera, but now also enjoys the protections of an SEC reporting company. And so the level of reporting and disclosure is that of what they'd see for any other investment they'd make in a public company or in an ETF or really any instrument that's out there. And it's important to take note of that because it should be viewed as evidence of the fact that, number one, investors are not waiting for an ETF or some other regulatory framework to come along. They're doing it now. And the fact that they have that access is really, really important. I think many people, and certainly a narrative that we've seen in the media, is that there's this massive institutional wave of money that's still trying to get into Bitcoin or still get into the digital currency asset class. And we've certainly seen that at Grayscale, probably dating back at least the last 18 to 24 months, but certainly saw a meaningful acceleration of that in 2020, when over the course of the year, about 86% of our inflows came from institutions. So we're talking about hedge funds, pensions, endowments, and then certainly have no shortage of family offices, high net worth investors also investing with us. I also would highlight that the Grayscale Bitcoin Trust, symbol GBTC, also became one of the fastest growing investment products in the world. I believe it started 2020 with about $1.8 billion of AUM, and between asset inflows and price appreciation, ended the year at about almost 18 billion assets under management. So really, really tremendous. And then certainly for us, we raised about $5.7 billion over the course of the year. And that should really just give a sense of how rapidly investors are allocating to this space. That $5.7 billion asset inflows is over 4 times the cumulative inflows that we experienced between 2013, when we started our business, all the way through 2019. So really, really massive inflows and massive participation this past year. So I think it's important to also spend a minute to talk about who is investing and why they're investing. Certainly we have a preponderance of institutions investing in Grayscale products. And one theme that we talked about from last year certainly was this idea of verifiable scarcity. There will only be 21 million Bitcoin, and the juxtaposition between that and the fact that fiat currencies are being perpetually printed and being diluted. So that's certainly a theme that stood out during 2020. But we still are seeing that investors are increasingly allocating to the space for the diversification benefits that it provides. There is no question now that it is a very widely held narrative amongst the investment community that digital currencies like Bitcoin are thought of or are believed to look or feel like a digital gold, or perhaps a digital store of value, or a gold 2.0. And so we do see investors rotating out of their gold allocations and into assets like Bitcoin. I think over 2020, we also saw the emergence of a new breed of investors that were Ethereum only or Ethereum first investors. So typically we'd seen investors in almost every instance, their first investment in crypto was in Bitcoin. And in 2020, we started to see the emergence of those that wanted to only go into, or their first investment was Ethereum. And so now we're seeing really across the spectrum, investors really looking to increase their allocations to this asset class by investing in other assets besides Bitcoin and besides Ethereum. And again, at Grayscale, we have 9 different investment products. So we're very, very closely monitoring the flows and where investors' allocations are going. And what's also interesting is the fact that over 50% of our investors over the course of the year came from outside the US. And so we want to make sure that folks understand that this is not just, a US-centric phenomenon, because that's where the futures market is, or that's where a lot of the price discovery has come from, but rather this is really a global participation. We're seeing investors from Western Europe, from Asia, from South America, really from every corner of the globe. I think one of the things that's also important to share, which is something that our team is very committed to doing, is every year we conduct a survey that looks at investor attitudes towards this asset class. And we published the study, and if you haven't had a chance to see it, it's available on our website at grayscale.co. But interest is really on the rise. We saw that more than half of US investors surveyed were interested in Bitcoin. Certainly, again, the global pandemic did increase their interest in investing in this asset class. And I think one of the important pieces of this is really all about education. These investors are looking for new ways to build out their portfolios. They're talking to their financial advisors about it. They themselves are wanting to invest in it, but there still remain a lot of misconceptions. And so I know certainly my team and a lot of teams within the digital currency space feel a tremendous responsibility to educate these audiences. And so we continue to develop a huge library of resources on our website that give people everything from primers on digital currencies to portfolio construction to valuation. And one of the things that I certainly feel is resonating with these audiences is the fact that, you know, this does not have to be a once and done investment, but rather a lot of folks, whether they are more on the retail side or on the institutional side, are really scaling into these positions over time. And the fact that they can do so is super attractive. Now, I'm pleased to share that even only just a couple of weeks into the new year, that a lot of that momentum that we've been experiencing and seeing is really not only carrying through to 2021, but I actually venture to guess that it's accelerating. So one of the big things that I think you'll see, and if you haven't already, is about this idea of career risk. I think for a long time, there have been a lot of professional investors who have been concerned that if they allocate to this asset class and it doesn't go well, that it's not time tested enough, it hasn't been around long enough for them to actually make that leap of faith. And I'm actually starting to believe that many of these people are starting to realize that the career risk is actually not about investing, it's actually about not investing, or at least not considering this. And so you're seeing a lot more in the way of our institutional investors, not only the portfolio managers and the analysts and the researchers, everyone is kind of getting on board with this idea of exploring the asset class. And again, with every institution, every investor, digital assets are fitting into a different sleeve of their investment portfolios. One of the untapped audiences that I know is important to Grayscale is certainly the financial advisor community. Here in the US, that represents trillions of dollars. And this is a community that has largely not had like the pipes or the rails really built for them to access digital currencies directly for their clients. And so today we're fielding an unprecedented amount of inquiries from the financial advisor community and are confident that that is going to be another driver of growth for participation in this asset class in the year to come. We're also seeing a real kind of centering of where mining activity is taking place. So our sister firm, which is called Foundry, has become the largest Bitcoin miner in North America. And I think a lot of people have previously held notions around mining activity largely being concentrated in China and other parts of the world, but that's actually really starting to shift a lot of it into North America, and also doing so in a way that is done through clean energy. So that's super exciting. The groundwork that was laid by the Office of the Controller of the Currency around stablecoin usage with banks and nationally chartered financial institutions, we think is super, super important. And so we think you'll start to see a lot more integration there over the coming year and have a lot of those institutions begin to support those types of assets, which will be a really big motivator and kind of open the door to other products and services being offered around digital assets. And I think probably, the second to last thing is this idea of nation state adoption. So we've certainly seen no shortage of corporations beginning to add Bitcoin to their balance sheets. We would be surprised to not start seeing some sovereign nations not only begin to really start piloting their central bank digital currency projects, which are super important, and we want to be clear, don't compete directly with digital currencies that are decentralized like Bitcoin, but rather start to actually solidify what this asset class looks like and the perceptions around it. And so it's possible that you'll start to see the beginnings of maybe some countries beginning to explore adding, Bitcoin or other digital assets to their reserves. And certainly here in the US, today is a historic day. We're on the precipice of a new administration in our government. And so we're, excited and encouraged to see how regulation will continue to shape up around the asset class. We find that our regulators are doing a fantastic job, engaging with industry participants like Grayscale and others, and certainly feel like further regulatory clarity is something that investors are seeking and can only be additive to the asset class from here. So with that, I want to thank everyone and appreciate the opportunity to share some of our perspectives from Grayscale. And certainly those of you who have an interest in getting involved with us or reading our content, please interact with us on Twitter, on our website. The information is here. And Nicolo, I'm not sure if we have time, but happy to maybe take a question or whatever would work well.
Perfect. So first of all, Michael, thank you very much for your presentation. So just one question. You said that in Q3 2020, alternative coins were used more than before. So where do you see there the reason for that? So, and is that also to be expected in 2021? Because we saw a huge surge of Bitcoin and Ethereum first. And then you said in altcoins in Q3 2020, that changed a little bit. So where do you see like the reason for that?
Well, I think one thing is certainly looking at returns, right? One of the things that investors are definitely looking at is the performance of various digital assets. And so investors are increasingly looking to either other assets that have other risk return profiles, or they're starting to see the development of ecosystems around specific coins. So for example, in an asset like Ethereum, we certainly saw that investors were very eager and excited by all the work that was being done throughout 2020 around DeFi and all the applications being built in and around Ethereum. So those types of use cases being developed around other assets, I think also are a real driver of growth.
Okay, so do you expect in there also in 2021 that will also continue? Or do you see again that people are going back to Bitcoin and Ethereum? Because we saw now in the last days also with Ethereum, that's again not more attractive, but still prices going up. So how do you expect the market to react on that? Still the altcoins going, people going in there, investors, or rather to the Bitcoin and Ethereum market?
I think it's hard to predict. I think for many investors, one of the things we've also started to see is the emergence of folks that want to just generally allocate to the asset class. So they're looking towards broad-based exposure. So we've seen a lot of uptake in our digital large cap fund, which kind of gives people one investment, but gives them broad-based exposure across several assets. And so I think as new investors are coming into the market, they're oftentimes looking at that. Whereas some of our more seasoned investors who have been invested in the asset class for longer are looking for individual tokens to gain exposure to for the diversification benefits, or because they're excited around specific use cases that they're seeing with those. And so certainly if DeFi and some of these other applications continue to take off in 2021, I do certainly believe that that could be a continued driver of growth around investment in those protocols.
Perfect, thank you. So I'm just looking at my screen here. So as we're in Switzerland, there are two similar questions. So can you give us an indication of inflows in Grayscale funds from Swiss institutional investors? And the second question is, did you see inflows from Switzerland, Swiss institutional investors? I don't know if you're allowed to say something in regards to that, but I think it's more about, okay, what are Swiss people doing? Are they also investing in Grayscale or not? And when, if you could say, what is the amount of the inflows?
Yeah, so I don't have specific numbers around Switzerland, but certainly if I look at the entirety of 2020, I believe the number is 86% of our investors were institutional. So that other bucket, that other 14% would be made up of high net worth individuals and family offices, et cetera. We have investors from every corner of the globe, certainly including Switzerland. I think for a lot of investors, the ability to invest again in an investment structure that kind of fits within their legal and operational framework is really attractive to them. Being able to get audited financial statements, not have to deal with custody, sourcing, safekeeping, et cetera, is something that investors often are really looking for because it looks and feels much like the same way that they're investing in other parts of the market, whether it's gold or oil or using, what we broadly construe as access products in order for them to express a view on a specific idea.
Perfect. So I would conclude this speech with one more question. We have the discussion about institutional adoption of digital assets in 2021 and beyond. So what do you expect from the institutional sector for 2021? What is what are your expectations at Grayscale for that?
Sure. Well, I definitely think we're continuing to see a lot of the institutions that were allocating to this asset class in 2020 to continue to do so in 2021. In fact, we've already started to see that here just in the few first weeks of the year. In addition to that, I think the incumbent financial institutions are going to continue to offer and broaden access to the asset class. So last year, we saw, Cash App from Square, PayPal. I think you're going to start seeing other products and services being offered by the incumbent financial institutions, which is really, really important. And I think the investors that have probably been slowest to allocate to this asset class would probably be the pensions and endowments and foundations. And I think for many of them, they're increasingly looking towards alternative assets, alternative return streams. And I think digital currencies now are definitely going to be part of the allocations that they're looking to make.
Yeah, super. Good. Then, Michael, thank you very much for the insights and, really excited to all the things that come in 2021. And of course, and I really hope that I'm looking forward to the discussion we too will have together in St. Moritz in 2022, maybe also on the ski slopes then. So thank you very much for your time and have a nice day. Thank you very much, Michael.
Thank you.